And thank you, Ruth, for inviting me here. I see some familiar faces even in the audience, but most of you I don't know or recognize. My purpose for this relatively short presentation is to a little bit bring insight of digitalization, but mostly from the risk perspective. My background, I have two roles in the bank. This kind of main role is being this kind of head of credits currently in Nordea Group. Before I have been working in the banking for more than 30 years. Last 10 years in various type of positions in the risk management. For example, I was the bank's CRO, Chief Risk Officer, throughout this financial crisis period from 2006 to 2015 or something like that. And my perspective to this is very, perhaps this kind of pragmatic and hands-on, not so theoretical one. Let's hope that has some kind of interest to you. This very difficult subject, of course, digitalization and risk management, so that my purpose is to more or less describe you how we understand the digital world and the risks it's exposing to everybody, and a little bit also that how we are approaching those risks and how we are trying to manage those risks. But based on my experience, you cannot manage all the risks. That's in a way part of the being business, especially in the banking, but also in other areas, so that the business is about taking risks, but then managing those risks and making money out of that managing of the risks, so that the point is not to just simply avoid any kind of risks. My second role in the bank is being so-called country senior executive in Finland. That means that I'm then representing Nordea Group here in this country towards various type of stakeholders, external stakeholders, regulators, politicians, various decision makers, customers, media sometimes, so that you may have seen me also from those type of circumstances. But my main job is this kind of more or less managing the risks in our bank. The menu for this short presentation, I'm about to talk some 20-25 minutes and then allow some questions. Hopefully there will be some 10 minutes in the end, 10-15 minutes in the end. A few words of the digitalization, then this risk angle, and an example, or our example, how we are approaching those risks in our bank. You can call it digitalization, robotics, AI, whatever, but it's, of course, the starting point is that actually it has already transformed everything we see around us. It will continue to do that. It's a very profound shift, which is very positive shift. There are lots and lots of benefits of this. So that everybody is now talking about how we can unlock this potential of this digital workforce. There are various types of statements may be familiar to you. Related, for example, this last one, the internet, robotics, or robots, digitalization, or the business are like laws of the nature. That reminds me of one of my this kind of own experiences from reading one book. In 95, I think that the year was. The book was written by some guy called Bill Gates, and the book was titled as The Road Ahead. And remember, this was 95. The internet, World Wide Web, has already been kind of invented. It was there, but it has taken some first steps. Bill Gates in his book said that he sees this internet as a big shift in the history of the mankind as two earlier inventions. First one was when man learned how to write, and thereby being able to distribute information, share information in other ways than just from mouth to mouth. So that you can write something which was stored and you could hand it over, or it could be distributed to other persons. And the second, that type of invention was invention of the telephone. So that then you could talk to somebody real time somewhere else, of course, provided that there was a connection. And then this internet, in his thinking in '95, created as profound change in terms of history of the mankind. And all these are related to communication, data, sharing, being connected. Looking back, I think that he seemed to be quite right, so that I'm sure that he didn't even saw that what is enabled through this kind of connectivity of the data and information. This has caught headlines, this robotism, very many headings, for example, related to the banks, how banks are taken this into use and what are the implications. It creates some kind of feeling that the banks would be in the front runners of this development. I tell you a secret, that's not true. Banks are only taking these kind of baby steps in this area. The true winners, the true this kind of capabilities or companies who are able to use these capabilities are naturally these large global data companies, these GAFAs of this world, the Googles and so forth. Banks are just starting to scratch to the surface. But there is lots of issues happening, and so that I'm not saying that nothing is happening in the bank side, in the financial industry. Quite a lot of things are happening, but it's still to become so that we see all the consequences and opportunities this brings to us in terms of positive consequences and opportunities. You can see also Nordea in the headlines, so that we have also introduced in some areas good services, which I will share you with one very concrete example. So that this is perhaps the first area we started to use robotics in our bank. It's called KYC, Know Your Customer. Those who are following the news may be familiar of the importance of this type of work, because this is related to anti-money laundering and how important this is. So the banks, when they are onboarding a new customer, has to take lots of information in and analyze that what is this customer, where the funds are coming, what is the normal behavior of the customer, should be in the transaction accounts and so forth. Then the bank is obliged to, when the customer has been onboarded, the regulation says that every third year you have to update this information, this KYC information. We have 9 million customers. You can imagine how big a workload it is, so that then it means that we are roughly updating 3 million customers a year. And so far we did it by manual labor, more or less. Now we have introduced robotics to this, and then you see in the bottom of the page what does it mean. We send to the robots this kind of customer list, and the robots start to work, gathering information from internal sources, external sources, updating these files, then putting that input to this kind of internal tool, which is then the advisor or this kind of human is taking a look at how does it look like and verifying so that that's okay. This is a very simple example, but there are lots of benefits: savings, efficiencies, most of all better customer satisfaction, better employee satisfaction. So that a very good example that this is not taking out any kind of job. This is just making, for example, this type of job content much more contentful and motivating, taking out this kind of routine type of tasks. So the good news is that there are lots and lots of benefits of all this what we are seeing around us. But this is, of course, changing completely the risk landscape, also in the bank, but then naturally in all companies. First, if we talk a little bit about financial risks, if we classify risks as financial risks and non-financial risks, latter being this kind of more operational type of risk, this kind of common denominator and this kind of challenge this provides us is this kind of connectivity, because this world is now fully connected globally. This means that talking about the financial risks, if there is robotics doing trades, for example, in the stock exchanges, imagine that you put in false information to the robot, and that is triggering lots of sales or buys. How does it impact then to the whole world? Think about the financial crisis even. As we know, the financial crisis 2007 started from US. They just simply granted loans, lots of mortgage loans to the customers which were not credit worthy. And then they just packaged those loans and started to sell those out to the global financial system. And the machine kept on rolling and rolling and rolling, originating more loans, not keeping those in those banks' balance sheet, but distributing those further to all over to the world, to somebody else's balance sheet. Without this kind of connectivity, this kind of digitalization in the old world, those banks, they would have kept those loans in their balance sheet and only for that risk level that they could tolerate. Now they were just originating and rolling this and distributing, and look what happened. Everything in this world is real time. Volumes are immense. On the operational risk side, of course, it's the same type of issue. So that now all our systems, processes are under continuous attacks, threats from various sources. Also, this kind of quite normal operational risks, i.e. disturbances in the systems, outages in the systems, kind of mistakes going into systems. Imagine real-time volumes, enormous volumes, transaction volumes, how detrimental this type of risks are if they are starting to materialize. And because this is global, everything is connected. Now then, of course, there are also good news, so that this may sound very scary, so that how to navigate in this type of dangerous world. So that there is a global focus now on this. Regulators have woken up. They have set a set of rules, regulations. Everybody has to apply to the financial system, the players, banks included. We are, of course, taking our own actions to have some kind of control over this, so that it's not only this kind of bad news. And then I'm coming back to those risk mitigations a little bit later. But still a little bit then painted the picture that what is the new risk landscape in this area. As I said, we are under continuous attacks by different stakeholders. There are these kind of traditional, quite normal actors you could consider that are trying to misuse this type of interfaces and digital approach. They are these kind of groups which are belonging to organized crime. They are insiders, always perhaps the weakest link in this type of operational risk, financial risk, for example, in the financial institutions. They are our own employees. So that if then these kind of criminals are able to go in and team up with then staff members, then of course the likelihood that these kind of mistakes can be executed is increasing by far. And there are of course people who want to make frauds and steal money. But there are also these kind of new threats coming from opportunistic groups, which is very difficult to, in a way, perhaps defend, because they're
their targets are not these kind of financial targets. They have a cause, and they are willing to take whatever they are willing to go as far as it gets to let's say, promote their cause, and creating damage to those who they think that are the bad people or bad organizations in their mind. But what is also very scary is that there are states, clearly, government-sponsored these kind of teams and groups which are using this type of opportunities. And so that there start to be this kind of risk map, which is there are traditional ones, but there are very new ones also in the field. And I have chosen an example of North Korea, just because this is real. This is what has happened, not so long ago, 1-2 years ago. Of course, there is no hard evidence, but it's so widely analyzed, for example, these cases, so that there is so-called Lazarus Group, which seems to be sponsored by this state, also analyzed by these sources you can see on the slide. They, for example, they did this kind of two attacks. One to one Taiwanese bank, and imagine one to a central bank of Bangladesh. What they did was that they went into those banks' systems, then they were able to go. They used then those banks' SWIFT interfaces, which is this kind of bank-to-bank global money transfer system. And then they started to initiate money transactions, of course, to their purposes and accounts. The other one was, in a way, not so successful. They managed to transfer the money, but then the money was collected back because it was found quite soon. But the other one, this Central Bank of Bangladesh, actually, it lost 80 million euros. They were able to initiate these kind of money transfers of worth 1 billion euros, or US dollars, sorry, using this central bank's SWIFT interface. But actually then they were not able to achieve then roughly a little bit less than 100 million benefit of that. So that we are talking about very serious issues, because you are working with this type of, let's say, kind of enemies, if you want to call it in that way. As I said, then coming to this, that how the industry and authorities are now trying to approach this risk and handle this type of risks. We often in the bank side, we are criticizing authorities and regulators so that please don't introduce so many rules and regulations. But here I have to say that this is good what these guys have been saying, because this is global. This has to be addressed by global tools and approaches. Now, there is a very strict rules and standards set for banks and other financial institutions related to these issues. New laws, new practices, some local, very many, this kind of area-wide, at least European level. And that in a way ensures that I'm sure that we are able in this industry to reach the certain base level of the protections, which are controlled, scrutinized by supervisors and regulators. But then, to be honest, this level which is required by authorities is a base level. If the banks would only, let's say, satisfy with that level, the problem would not be solved. Banks have to go higher, so that it's not enough to just comply what is required, that they have to make their own analysis and set their own risk appetite levels. How we have addressed this in our bank, this is a top priority to us. I would say that even if you think banks' competitiveness in the future, with the pressure of all these new entrants coming in our field of the business, I think that this kind of trust and safetiness will be the key to be able to keep and attract customers. That could even turn to be this kind of competitive advantage to traditional banks. In this world, if there's one institution where customers can rely that when they hand over their sensitive information, it's there and nobody can reach to that information, kind of a digital vault or something like that. So that I think that will be very precious asset to any institution. So then we have taken this as a very, very serious issue, and that's one of our top priorities, that we want to build ourselves as a safe and trusted bank seen by our customers. We have structured this work in so-called 3 lines of defense. We have this risk kind of is owned by our business units, but then we have this kind of so-called first line defense security organization, one of the largest and strongest in Nordics, so that there are these kind of competent people who know these issues, who are subject matter experts. We have recruited those all over the world. In those teams, for example, we have people from Russia, we have people from China who used to be more or less on the other side of the fence. And so that because this is global, you can't find these kind of resources and competencies only from one of the Nordic countries or from 4 Nordic countries. That's in a way who are doing this full time every day, day and night. Then we have a second line defense, which is this kind of independent risk control function, who is setting this kind of our risk frameworks for this risk, for any other risk as well, but for this risk. So this has to be our standards. This is the framework and our tools we want to manage this risk. This is the way we measure the risk, identify, report, analyze, initiate mitigating actions. And they are in a way framing that. And then this first line defense has to plan their actions and manage these risks within that framework. Very important part of this work is that we are also even proposing to our board of directors so that, okay, we would like to have our risk appetite in this risk at this level. Do you agree? Because as I said, that we cannot start from the assumption that we avoid these risks, so that we would not tolerate any kind of risk, because you have to always have some kind of risks. And then it's with the top management, we are balancing or calibrating that what is our risk appetite for this risk, and then we are introducing these practices and procedures accordingly. And then we have third line of defense, which is independent audit function, internal audit function, as in many other companies, who are just simply then auditing both this first line defense effectiveness of the work, how are they applying these frameworks and these risk, are they working within this risk appetite set by the board, and then they are also reviewing this second line defense, i.e. are our frameworks compliant with the regulation, are they compliant with the risk appetite that the board has set, so that there are these kind of various level of controls, which may sound like very hierarchic approach, but actually you have to have very strict structures and roles and responsibilities in this. I see that the time is running. This is then our, just to illustrate that when I said that this first line of defense security function, information security function, what does it mean in practice? So that we have a chief security office organization that has this kind of pure IT security, this kind of teams who are ensuring that our IT systems, automated controls, our protections are up to standard, and nobody can get in or get out if they have been able to get in. We are talking about this kind of cyber defense center, which is very, of course, naturally populated by skilled professionals in this area and who are only dealing with these issues. But then we have this kind of so-called
information security office and officer, so that then it's a more broader approach to this information security management, and especially our security culture and training our employees all over in the organization. And then naturally there's also physical security, because that is also a very important part, very old-fashioned and traditional, but physical security, if you don't have that at a good level, then it allows people to just come in and put their, let's say, whatever memory sticks or this kind of some kind of viruses in our systems, or steal some sensitive information or what have you. And we have these kind of very simple processes, which may look like this kind of even naive, but this is also, it has turned out to be a very, very valuable way of addressing these very complicated issues. We have so-called QRA methodology, quality and risk analysis. Every time we introduce a new product, we make a change, it may be even organizational change or whatever, then we are forced to make this kind of analysis from the risk perspective. Identify the risk, assess the risk, then if the risk is beyond our tolerance, then how to mitigate the risk, then we start to report it. And a very important part, and this is where I stop, is the last bullet point. All employees in the organization have to be aware of this. So that we have a mandatory training. We have 30,000 employees in Nordea Group. This is mandatory training, so that awareness what this is all about, awareness of our procedures, requirements, what you can do and what shall you do in your daily work in order to fulfill your part of these risk mitigants. So I will stop here, and I still perhaps allow for 5 minutes for questions, because I would be very interested to listen what you have in your mind. Does this trigger any kind of thoughts in your heads? Please, go ahead.
Please.
Yeah.
Okay, thank you very much. We start with the questions.
Sorry. I was just wondering, you talked about information security in general, but what do you say, are there any unique risks associated specifically with mobile banking, as banking is transitioning towards that kind of world? And if there are, then how is Nordea dealing with those?
Yeah. So it is, of course, I would say that the mobile banking as such, as a new channel perhaps, is not the key driver for additional risk, but that is exactly this, that, okay, with mobile banking, you are touch away from these kind of banking services, so that when you then touch your screen and for example, apply for a loan or want to have a loan or some kind of investment, make an investment transaction or money transfer, then when you touch, that's done in the bank end. So that then better be that the bank's practices, these kind of controls, all these kind of processes are in good shape, because then it's in split second the transaction is going through from counterparty to counterparty. So that is exactly this real time is more or less this issue, and also these large volumes these mobile banking services are allowing, so that the transaction volumes have multiplied with the use of this after the introduction of the mobile banking, because then people are much more often in connection to the bank. But I think that the modern technology provides good protection as such, this kind of technical protection for the mobile banking services, so that perhaps that's even safer than these kind of more old-fashioned services where you have also manual or human touch between the processes.
Thank you. Other questions in the audience? While you are thinking, okay, please can you, Oscar, take the microphone there. I have a short question. Now the whole financial sector looks a little bit different than perhaps 10 years ago. When I was little, we had one dog and one cat. They were not really collaborating. But then I bought a cockatoo. And it had a large cage, and then it was sitting on top of the cage and yelling. And then when he came, the cat and the dog actually started to collaborate. What would you say, for example, these cybersecurity things, they are very expensive things, and even if your systems would be very well working, you are dependent on the whole financial sector. What would you say about the collaboration?
No, that is the key, because the core message in my presentation is that everything is connected. And then if there's a one weak part in this space, then it's impacting on everybody else also. And that is, of course, then the reason that at least I see a lot of benefit of this kind of global regulation and requirement setting for all the banks. And for example, in Europe, I think that we are on relatively high levels, so that the requirements are quite high. We have lots of even new regulation, fresh regulation addressing these challenges, and everybody has to comply currently. But it doesn't take away this problem you are highlighting. That's a real problem. So that then, if there's a weak link, there is a weak link, and that is impacting to the whole area. But banks are also currently, they are very much monitoring each other. So that, for example, in this kind of, if you're talking about money laundering, currently it's so that if there is this kind of transaction coming from other bank, for example, to us, and then we see from this kind of transaction monitoring that, okay, this is a sanctioned company, or this is something which we don't like, we are blocking that transaction, and we are contacting the sending bank and saying that, come on, so that how you have how it's possible that you have put this through to us. And then if this continues, it's quite normal that banks are then just simply cutting lines from some banks. So, okay, it looks like that your KYC standards or any money laundering processes are not up to date. We don't anymore deal with you. So that it's also this kind of self-controls now built in the system.
Thank you. The last question.
Yes, hello. I was wondering, because many who are aware of the mobile devices know that Android and Apple have different approaches to how they let banks or other third parties into their NFC chips, which can be used for payments. And Nordea is cooperating also with Apple. So could you comment somehow what is the difference between working with Apple and working with Android ecosystem from Nordea's point of view?
From our point of view, you are right that there are differences in their approach. But for us, it has been important that, because we think this from the customer need perspective and from this kind of service levels perspective. And we know that there are lots of customers who have either Apple or Android type of phones, and we have wanted to, of course, offer good service to everybody. Of course, I can't go into details of our agreements with those parties, but for example, from this kind of security perspective, there are no big differences. Of course, we are setting our standards so that we are sure that everything is safe and sound, and it's not any kind of problem to these type of third parties. They, of course, understand very well. But the way they are letting these kind of third parties in or partnering with them is different, and of course, then perhaps also the end services may be a little bit different, and the way they are then developed further may be a little bit different. But for us, it's important that we are just finding these kind of good third parties, partners to us, so that we can help our customers. But as you can see, that we have been able to make a cooperation with both of those big entities.